Good morning, traders. Welcome to the Stock Market Morning Prep video for Thursday, October 15th. Can't believe it's already halfway through the month. All right, well, where do we go from here? We looks like we did get a little bit of a pullback. We mentioned earlier about the McClellan oscillator. Stocks above the 50-day moving average, stocks above the 200-day moving average, and advanced decline with volume. Pretty much at these extreme areas. Not as much as I really liked, but we did get a little bit of a pullback. You can see here we've got a couple of days. We shot up and then we roll back down again. Really what this is making right now is sort of a little bit of a bull flag, but it's yet to be seen. We do have a double top here, right at the 61.8% retracement, so I like this area for a short. I like the upper end of the range here a little bit better, more like the 204, which would be more like the 2014 in the ES, which we got up there a couple times and failed. So I do like this area short here. However, we are now coming into earnings season. Now, earnings season hasn't been great. Goldman Sachs just came out with earnings this morning, and they are a miss. Walmart yesterday got destroyed. JP Morgan. So the song remains the same. The earnings have not been great. So that's going to, I think, or at least for that matter, put some sort of a trend in place. Now, it's still a little too early. We're up about 6, 7, 8 days in a row, and then, of course, we got 2 days of indecision, and we have 2 days down days. So I'm still looking for a little bit of a pullback. I think what I'm looking for is what I'd like to see is fill this gap area right here. So this is where I want to look this market to come back in. If we can get into this gap area and hold, then we could be poised for a nice Santa Claus rally going into November, December, the holiday months, okay? So let's keep an eye on it. Let's just go run through the charts. Nothing really has changed. We haven't really pulled back dramatically here. We're still underneath that 200-day moving average on all of the indices. And I want to show you what's really concerning is the transports and, of course, the Russell, okay? These are the two leaders, all right? Let's take a look at the Russell. As you can see here, we have a lower high in place from this previous high, from this previous high, from this. So we're making lower lows and lower highs here. Bearish symmetry. We're back below this downtrend line. As you can see here, we closed just below it. Let me just get that exact. And not looking good here, guys. Again, remember, below this area, we have a thin zone here. These volume profiles are showing me that we have thin areas of support. So if we get to move lower on volume, we're going to definitely at least fill this gap. Right now, it's still early, and we're up about 14, 15 handles, a little bit of a relief rally. I don't see anything really true, meaning that no meaning behind this little push up. Now, we have a lot of economic data coming out at 8:30 and 10, and we do have some Fed governors speaking, so it's going to be a tricky morning here. So maybe back off, see what happens, and let's see if we get that true trend in place. Yesterday was a fiasco. We rallied up. We rallied down, we sold off, we rallied up, and just to sell off again, give it all back late in the afternoon. So a lot of traders got caught on the wrong side, and it was very quick, very violent too, by the way. So this is what we're dealing with here. So if you're not accustomed to the volatility, take a step back, guys. There's nothing wrong with doing that. Cash is a position, believe it or not. All right, IWM, let's take a look at the transports. Again, not looking too great. Better than at least the IWM, the Russell. But again, guys, we are coming into some seasonal strength here in the Russell, and we're coming into some seasonal strength in the market in general at the end of this month, going into the first week of November. So that also could help push stocks higher. But remember, it does not have to happen. But let's keep in mind, start making a good list up on what are you looking for as far as holding positions, building a little bit of a base here, okay? All right, transports not looking too pretty as well. But again, below the 200. That needs to be noticed here. You got to point this out to everybody. Again, diamonds below the 200. So this is not a good sign here that all the indices are below the 200. Fund managers will react to that. And if we can't get above the 200 and hold, build a new base to move higher, well then, that Santa Claus rally may be in jeopardy this year. Let's keep an eye on things. Let's see what happens. But internals look horrendous. I'm not joking, guys. Internals do not look great. I am not a big fan here to the upside. If I do take a stab at it, meaning build a couple of positions, it's going to need to be proven, meaning that I need to see some base building. I need to see markets quiet down a little bit and then start to rally back up on the news. Now, again, Janet Yellen and company, they're going to need to react. They should react, and they should be raising rates and stop holding us hostage here because they have no idea what they're doing as well. So, unfortunately, it is what it is, what we're dealing with. So let's just keep an eye on things. Let's watch the VIX. We're getting to a point where we're closing outside those Bollinger Bands, and if we can continue to push lower on the VIX, at one point in time, it's gonna produce a buy signal in the VIX, a sell signal in the markets. Okay. Last is the Qs. Netflix came out yesterday and got destroyed. Had a big bounce up. Let's see if those gains, or at least the recovery from the overnight, can hold. If that does not hold, and we're starting to see some tech really starting to get hurt, like Intel, then we're going to be in trouble, because if the banks can't rally and technology can't rally, those are the two caveats that we need to help us out. Along with the transports, I think we're going to be in trouble. And now we know that retail hasn't helped along too, so the consumer's hurting as well. So really, generally speaking, I don't believe this market should be at this area at 1996 in the ES. But again, it's not what I think. It's what the markets are doing and what we want to react to the markets, okay? Just keep that in mind. Have a great day, everybody. Be safe out there. Use your stops, and we'll talk to you tomorrow. Take care.